One of the best ways to truly make passive income is by investing in the stock market. When you invest in the stock market and you buy a security that pays a dividend, you can get paid quarterly or even monthly. Now, one of the ways to do this is through stocks, but stocks can be a bit risky for the average person and can cost a lot. Another way to do this is by investing in high dividend yield ETFs. A high dividend yield ETF will pay you when the market is up or the market is down and can provide a steady stream of income. They also provide a lot more diversification for your portfolio. Hi, I'm Nadia.
And I'm Nicole, and we're the Wealth Twins, and today we're going to tell you about 5 high dividend ETFs that we believe you can use for passive income and may even put in your portfolio. All the ETFs we're going to speak about today are low cost, which means more of your money will be left invested in the market working harder for you. Not only are we going to tell you what these high dividend ETFs are, we're going to tell you what their dividend yield is, we're going to tell you what their dividend per share is, and we're going to give you a background of each of these ETFs so that you can make an informed decision. If that sounds good to you, hit that like button because we like you. And with that, let's get started.
First up, it's a SPDR Portfolio S&P 500 High Dividend ETF, ticker symbol SPYD. This has a dividend yield of 3.87% and has paid $1.60 per share over the past year. This pays a dividend quarterly. SPYD is an ETF with the goal of tracking as closely as possible to the returns of the S&P 500 High Dividend Index. If you don't know about that index tracks the top 80 high dividend yielding companies in the S&P 500 index. SPYD is considered a low-cost index fund that also pays a high dividend. And this is great when you're a beginner investor or someone who wants to start investing but doesn't want to put in a lot of money. The price of SPYD is currently around $41 off a 52-week high of $45, around $45. This ETF is part of State Street SPDR Fund portfolios and are great portfolios that are low cost and good for the average investor.
The second high yield dividend ETF that we're going to talk about is actually Fidelity's high dividend ETF, ticker symbol FDVV. Currently, this ETF is trading around $38 and has a dividend yield of 3.4%, which turns into $1.31 per share on an annualized basis. This high dividend ETF also pays on a quarterly basis. This fund is interesting not just because it's from Fidelity, passive income, and low cost, but because of what the fund tries to manage. The goal of this Fidelity high dividend ETF is to focus on buying mid-cap and large-cap companies that are still growing and who are paying dividends but also they believe are going to continue to increase their dividend. One of the companies that this fund holds is Apple, so it's a great example. This is a great company that is growing, that pays a dividend, and Apple has a great chance of continuing to increase their dividends because of their business model and the products that they offer. This is a fund that might be interesting if you're interested in early retirement or even FIRE, because this fund is focusing on not just getting dividends with your passive income, but companies that are growing their dividends, so therefore your passive income will also grow. If you're not familiar with FIRE, FIRE stands for Financially Independent, Retire Early, and it's a community of people who are looking to buy low-cost funds for their passive income so that they can live off the passive income from their investments and retire early.
Next up, we have Charles Schwab's U.S. Dividend Equity ETF, ticker symbol SCHD. The goal of this ETF is to track as closely as possible to the Dow Jones U.S. Dividend 100 Index. The current price for SCHD is around $78, and it has a dividend yield of 3.16%. It has paid out a dividend per share of $2.48 this year. The dividend for SCHD is paid out on a quarterly basis. What's interesting about SCHD is the criteria the fund uses to choose the companies that are held within the ETF. SCHD is a passively managed ETF, but it's a little bit different because it's a strategic beta ETF too. A strategic beta or a smart beta fund is a hybrid between a passively managed fund and an actively managed fund. SCHD is a popular ETF, and we've done an in-depth video of our analysis on this ETF. If you want to learn more, we link that video to the end of this one.
Now, you know our list of high dividend ETFs would not be complete unless we mention this next one, which is Vanguard's High Dividend Yield ETF, ticker symbol VYM. As of this video, the ETF is trading at around $111 off of its 52-week high of $115. The dividend yield is 2.88%, which turns into an annualized dividend per share of $3.22. This is also a quarterly dividend paying ETF. So why does this fund make almost everyone's list in terms of high dividend ETFs? One, because it's a very diversified fund. Two, because it's Vanguard, so you know it's high quality and also low cost. And also because it focuses on high dividends. This one is a little different from SCHD, which people usually compare it to, because this one actually has more companies in it. VYM is a high dividend yield ETF that has over 400 companies in its portfolio. The goal of this ETF is to buy large cap companies that they believe are forecasted to have a higher dividend yield in the near future. The fund is very diversified, but it is kind of tilted towards having more companies in the financial and in the healthcare sector.
Next, we have ProShares S&P 500 Dividend Aristocrats ETF, ticker symbol NOBL, Noble. The dividend yield on this ETF is 1.88%, and it pays $1.78 per share annually. The dividend is paid out on a quarterly basis also. NOBL Noble is the only ETF that focuses on the S&P 500 Dividend Aristocrats. If you don't know what a Dividend Aristocrat is, there are companies on the S&P 500 that have paid a dividend and also increased that dividend for the past 25 years. Most of these companies have done it for at least 40 years. Some examples of companies that are included in this list of companies are Johnson & Johnson, Procter & Gamble, and Coca-Cola. So they're well-known companies. Noble is the only ETF on our list that is an actively managed fund. If you wanted to buy a share of Noble today, you can go to any broker and buy it. If you don't have a broker already, use our link below for Moomoo because they make it very easy to buy ETFs and you get free stock just for opening the account. Noble is currently trading around $93 per share off a 52-week high of around $99.
Now you might be saying to yourself, okay, thanks a lot, twins. Thank you for your list of high dividend ETFs. But really, why should I care? Why should I care about high dividend ETFs? Well, let me tell you, because dividends, as you know, are a form of passive income. But not only that, we are living in an inflationary time. Since 1930, during times of inflation, 54% of the market returns from the stock market have actually come from dividends. Dividends are a way to get a return on your portfolio even when the prices of the stock market are going down and when inflation is high. On top of that, during inflationary times, those companies that were able to increase their dividends during times of inflation actually outperform the market overall. So in times of inflation, dividends is something that's necessary to concentrate on, not just because of the passive income that they provide, but also because of the protection that they give you during inflationary times.
So with that said, don't hold off investing in the market. Time in the market is more important than timing the market. So don't let these ups and downs and the volatility of the market that's happening right now stop you from investing. If you want to know more about some of the funds that we discussed in this video, check out the videos here when we go into more detail about SCHD and our investing playlist so you can get more information and help educate yourself on these types of funds. As always, if you like what we shared in this video, make sure you share with a friend and subscribe to our channel.